Hello and welcome to Faithful in Finances. I am Brigitte, and here I talk about biblical principles that have helped me financially to become financially stable and then financially independent. If this is something that interests you, then stick around. You may have heard that the Federal Reserve has announced that it is considering raising interest rates come spring. Now, that means that for people who are savers in high yield savings account, money market accounts, anything with variable interest rates, that means that we are exposed to lowered interest rates and lowered returns. Now, that's not going to happen overnight, but it does mean it may be coming soon. So, how can we prepare for this? How do we think about it? Well, one thing that we might do is consider certificates of deposits or CDs. So that's when we take our money into a bank or financial institution, they agree they're going to hold it for a certain amount of time and they're going to pay us a fixed interest rate. Why is that good news right now? Because right now, interest rates are at historically high levels. So you can earn 5% or more on your money right now. So that's a pretty good deal. And you still get FDIC insurance. And you know what? It's still not a bad place to park emergency funds. There are some things that you have to consider when it comes to a CD. And probably the biggest one is you can't just go in and pull your money out whenever you want to. Usually you're going to agree to let the bank or the financial institution hold your money for 7 months, 1 year, even up to 5 years. And if you decide you want to take that money out before that time period is up, well, you're going to be hit with a penalty. And that penalty can be pretty steep. It can be 90 days worth of interest. And at some institutions, it can be as much as 180 days that you will lose. And remember, we're in this to win interest, not give away interest. So, is there a way to get around this? Obviously, yes. One, you can just let your money stay where it is until maturity. So, wait for a year, wait for 7 months, get your money out, get all of your interest out, and you win. On the other hand, you can do what is called a liquid CD. And with a liquid CD, same general concept. You're going to take your money to a financial institution. You're going to agree that they will hold it for about a year. But after 6 days, you have access to your money, meaning that you can withdraw it and not pay a penalty. Now, you know there's always a little bit of a catch. And so here's the catch. Remember, I said that you could earn about 5% right now? Well, liquid CDs are not going to pay you that much. Maybe you'll earn 3.5%. So you're giving up some interest so that you can gain some level of flexibility when it comes to your money. There's the third way. And the third way is that you can create a staggered series of CDs. Some people call them ladder CDs, but essentially what it is let's say you have $3,000. You put $1,000 in a CD that matures in 1 year, another thousand that matures in 2 years, and another that matures the third year. Now, as soon as the first 12 months is up, you can take all of your money, all of your interest, and call it a day. But if you don't need that money right then anyway, you can immediately buy another 3 year CD. And what's going to happen is that over time, every single year, you're going to have access to your money and to your interest. And so you're gaining interest, you're gaining the higher interest, you have access to that, but it also gives you greater flexibility in having access to your funds. I really think that this is something that it may be time to consider because we just don't know how long this opportunity is going to last. All right, so you say, I am sold. I want this CD. I want to earn this high yield. But where do I find these high yields? Well, I've got two websites for you. And I don't get anything from either one of these sites. I'm just sharing with you resources that I use. The first is called bankrate.com, and the second is called nerdwallet.com. I like these sites because both of them will allow you to put your zip code in, your locality in, and it will give you the best rates for your community, but it will give you rates beyond that as well. Because, quite honestly, some of the best rates are for online financial institutions. You just want to make sure that these institutions are insured. Generally, you'll see something like FDIC insured or state insured. I pray that this has been a blessing to you. I hope and pray that it's something you think about very seriously. Take advantage of it now while you can. While you're at it, please like and subscribe to this channel and check out this video. I think that you will like it. God bless you.